Welcome to our latest XAU/USD analysis report covering the period from September 15th to 20th, 2025. In this presentation, we'll examine the recent gold market movements, analyze key technical levels, and provide actionable trading recommendations based on comprehensive research from multiple financial sources. Let's dive into the data and discover the opportunities in the gold market for the coming weeks. Looking at the latest TradingView data, gold continues to show remarkable strength with the current price at $3,721.115, representing a daily increase of nearly 1%. The precious metal has established an impressive trading range between $3,683 and $3,727. What's particularly noteworthy is gold's year-to-date performance of 41.75%, and one-year gain of 43.87%. These figures underscore the powerful bullish momentum that has characterized the gold market throughout 2025, despite the technical indicators suggesting a potential consolidation phase ahead. According to investingLive's latest technical analysis, gold has reached another all-time high, with bullish momentum building steadily since last Friday. The market appears to be running on inertia in the absence of strong bearish catalysts. However, traders should be cautious as upcoming U.S. economic data, including flash PMIs and the PCE report, could trigger a pullback. Key levels to watch include the hourly resistance at $3,723 and the minor upward trendline support around $3,630. While the long-term outlook remains positive due to falling real yields, short-term corrections are increasingly possible. ActionForex's market analysis highlights gold's recent price action, noting that it printed a fresh all-time intraday high of $3,707 following the FOMC's monetary policy announcement. After a minor corrective decline of 2.2%, price found support above the key short-term pivotal level of $3,600, leading to a bullish reversal and a continued rally to a new record high of $3,720. The preferred trend bias remains bullish with key support at $3,660. If this level holds, we could see acceleration towards targets at $3,750 and $3,776. The medium-term downtrend in U.S. Treasury real yields continues to support gold prices by reducing the opportunity cost of holding this non-income-bearing asset. Forex.com's senior strategist James Stanley provides valuable insights into the Federal Reserve's recent actions. The Fed delivered what Stanley calls a risk management cut, but with less dovish forward guidance than markets had anticipated. This led to a U.S. dollar rally and a pullback in gold from its highs. The Fed's dot plot indicated only 25 basis points of cuts for next year against the 50 to 75 that markets had priced in. Despite this, gold is now retesting the $3,654 area, which presents a possible higher low support level. Importantly, the Fed has signaled willingness to continue cutting rates even with inflation remaining above target, which provides fundamental support for gold's long-term strength. DailyForex's technical analysis presents a strongly bullish overall trend for gold. The metal reached an all-time high last week at $3,674 per ounce before closing around $3,642. Key support levels are identified at $3,620, $3,580, and $3,530, while resistance levels stand at $3,670, $3,695, and $3,730. Technical indicators show the 14-day RSI hovering around 77, well into overbought territory, with the MACD also showing overbought conditions. For traders, specific signals include selling from $3,685 with a target of $3,540 and buying from $3,588 with a target of $3,680. The Federal Reserve's easing path is expected to continue supporting gold's technical rise toward the $3,700 level and potentially beyond. Our comprehensive analysis identifies several key factors driving the gold market. The Federal Reserve's recent interest rate cut, while expected, came with forward guidance that was less dovish than markets had anticipated. This created temporary volatility but hasn't derailed the overall bullish trend. The weakening U.S. labor market, with significant downward revisions to employment statistics, continues to reinforce the case for monetary easing. Technically, gold remains in a strong uptrend, trading within a well-defined ascending channel, though momentum indicators suggest increasing likelihood of a consolidation phase. Key levels to watch include major resistance at $3,776, current price around $3,721, and pivotal support at $3,660. For short-term traders looking at the 1 to 2 week horizon, we recommend a buy-on-dip strategy, entering around the $3,660 support level with a stop-loss below $3,620. Target prices are $3,720 initially, with an extended target at $3,750. Medium-term traders with a 1 to 3 month outlook should view significant corrections as strategic buying opportunities, especially if price approaches the $3,560 to $3,580 support zone. The primary target for medium-term positions is the $3,776 to $3,800 resistance area. Be mindful of key risk factors, including a potential hawkish shift from the Fed if inflation data exceeds expectations, unexpected resilience in U.S. labor market data, or a technical correction due to current overbought conditions. Remember to implement proper risk management through appropriate position sizing and predefined stop-loss levels.